Welcome to RFI's Banking Uncovered, the podcast going behind the industry PR, the media spin, the product awards, and the investor reports to look at what's really going on in the customer data, and to ask global thought leaders about their thoughts and views on the future of banking and payments.
Today, I'm delighted to be joined by Olivier Crespin. And Olivier is a 4-times bank founder, having previously been global head of digital banking at DBS Bank. He then launched Digibank, one of the first digital-only banks in India. Then he launched Digibank in Indonesia. Then he moved to CIMB, where as head of fintech, he launched a digital-only bank in Vietnam. And then more recently, he's launched the digital-only bank Zand in the UAE. He's also the head of the Center for Entrepreneurship in Cairo, Egypt. So welcome, Olivier, and thank you very much for joining us today.
Thank you, Charles. It's always a pleasure to be with you.
Always a pleasure to talk to you as well. And obviously able to provide us not only with huge insights into digital banking, but also how to get stuff done. You've been incredibly busy in the last kind of decade or so. But just to start, given your huge experience in running the digital operations of a traditional bank, in building digital-only banks, in all the different markets you've been working in, what do you think are some of the most significant opportunities and challenges over the next 3 years in the world of digital banking?
Yes, that's a good question. In fact, I think all the challenges, the key challenges that we have right now in digital bank are the real opportunities for digital bank. So the first one I think is about customer acquisition. And it's very important for digital bank and banks to be embedded in ecosystem. So I think to address this challenge, it's very important to build the bank as a platform that is able to really connect very well with the new digital players, such as marketplace, such as all the digital company we see, and also to be able to add value to the traditional people or traditional companies who are jumping into the digital space. So that's one of the key challenge, to build the bank as a platform. That's one. Second aspect, another challenge is that how can we reduce the cost, right? And how can leverage the latest technology available? And you know, there is, I would say, two kinds of technology coexisting right now. There is a traditional finance technology, and there is a decentralized finance technology. And in many aspects, decentralized finance technology is more advanced than traditional finance, you know, because when you build a technology on a blockchain, you can have traceability of the assets. You can leverage, for example, when you talk about transaction banking, for example, you can leverage the smart contract to be sure that you manage to get a true delivery versus payment, for example. And you have scalability that you don't have in a traditional banking, plus the speed of transaction. When you do a transfer of fiat or crypto using the blockchain, usually is instant, and so the cost is very reduced. So how are the digital bank or the traditional bank are going to be able to embrace this new technology is very, very important. The last aspect I would say is about how do we address the SME, the SME market, because I think there is a lot of progress for retail banking on the digital space, but SME is pretty untouched. You know, when you can, in some instance, you may have SME of one individual with the main shareholder, the only beneficiary of the company. But when you start going in a little bit 2, 3, 4, 5, 10, 50 people, company is much more difficult, and this has not been addressed yet. And the overall of these 3 challenges, above all of them as well, is, you know, security and how you manage the risk of being digital, which is going across all this. Because when we go digital, we have a few things happening. First, velocity, everything goes much faster. So you need to be able to cope with that. Second is you don't have a physical interaction with people, so that constitutes some risk. So that's also challenges that digital bank need to address going forward.
Okay, yeah, you raised some really good points there. I'll come back to acquisition and security in a second, but just talking about cost and embracing technology. One of the biggest, I mean, we've heard for 10 years now about, the death of the branch, and one of the biggest challenges for traditional banks is they've got these huge branch networks, and one of the challenges for fintechs is the security and the customer resilience to using the branch. Now, one of the things that we saw in the pandemic was obviously the ability to use the branch was removed. And so customers were forced into using different channels, using video channels, either dealing with a human assistant or a virtual assistant. And as we've come out of the pandemic, our data across the Middle East shows that 70% of customers would like to carry on using that video channel as opposed to going to the branch. And what they're using that channel for is what they previously went to the branch for, which was trying to resolve issues or complaints. So as customers, both consumers and small businesses, move to this truly more tech friendly channel, which is scalable and which doesn't have the costs associated with opening a brick and mortar branch, how can both traditional banks and digital only banks utilize that? What are some of the opportunities that presents for them and some of the challenges?
These are great opportunities, Charles. And I think that what we realize is that particularly it has been accelerating during the pandemic, right? Acceleration is accelerating is what we are seeing. People now want to do, or most people, I would say, things faster from anywhere at any time. So even the interaction with a bank, people want to save time, right? They don't want to have to queue to go in a branch, or they don't want to spend too much time on the phone. Try to listen to a menu, right? Telling you dial 1, 2, 3, 4, 5. So I think now what we see, technology is also coming at the support of the bank. And, you can see more and more chat channels being open with client. Most people, I would say, would prefer to have a chat versus a phone call, because when you deal with your finance, and people, they want to do from anywhere, as I mentioned. If you're on a phone and you talk about your finance, everybody around may listen to you. So the chat is much more comfortable. So now you have a combination of chatbot plus AI. And artificial intelligence has made huge progress. And we went from, in the past, maybe 10 years ago, it was more predictive intelligence. So it was what we were able to do in the bank is that from 2 input, we're able to generate 1 output. Now with generative AI, we are able to generate the narrative, to give better explanation, and be able to embrace and to look for a lot of information across multiple data that is very often is not possible to do from one human being, or will require a lot of training, right? So we can see that now by combining chat, by providing AI to human in a call center, for example, or people chatting, they will be much more productive. Because what we notice that AI is able to bring all the pieces together. And, it's like if you look at how do I do that? So most of the time, a human being with train is going to say, you do it this way. With AI, he may think, okay, if you do it this way, maybe there is something else that may happen. He's going to anticipate and give the support to the customer. So that's really, we see that accelerating as well. Many call centers are having the human plus the AI. And you have also a lot of initiative for maybe a little bit more simpler question, where you have the chatbot complemented by the artificial intelligence and generative AI. So that's the opportunity is there. Also, I saw some experiments on the metaverse. So it's a bit too early, right? Where we are going to go and put a mask and be able to navigate a branch, so recreate a digital branch. So I saw some simulation on that. We don't see a lot of people taking it up, but we don't know, right? How it's going to evolve going forward, mostly with the newer generation and the people who are maybe in the teens these days, maybe more familiar with that going forward.
Okay. You spoke about customer acquisition earlier, and you were just talking about, the speed of digital and the ease of digital, but also security. We know from our data that, the digital onboarding is incredibly important as the #1 driver of a good customer experience. And with the digital onboarding, customers, they want speed, they want ease, but they also want security. And security tends to create barriers, to slow things down. So it's almost an opposing force to speed and ease. So as digital fraud increases, and it's increasing in every market, both for customers and small businesses, how can banks and CEOs of digital-only banks think about managing that sort of slightly counter opposing dichotomy of speed and ease versus security?
Yes, so that's you're absolutely right. People want speed and don't want to waste time, right? They want to be able to open an account quickly, and they want to be able to transact very quickly. That generates some challenges. And so obviously for this, there is a combination of few area where improvement can happen. Usually in some market where we have a fantastic infrastructure, I said a kind of country infrastructure, government infrastructure, like for example, what you have in India with the Aadhaar card, what you have in UAE, what you have in Singapore, most countries right now, right, in Europe as well. When someone opens an account and you're able to check the information and verify the identity of a person through a central database, that can accelerate the onboarding and at the same time ensures that customers are protected, that his identity is not to be stolen, but also the bank is protected and the society is protected at the same time. So that's one. For transaction, we see transaction monitoring, because I think I said that at the beginning, is that when you go digital, you have a velocity. Everything is accelerating tremendously. A transaction is gone in a millisecond. And for that, you really need to be able to have system and cybersecurity team who is able to identify both parties, right? The sender and the receiving party, because once it's gone, it's very difficult to stop it. And also for transaction on card, for example, you need to have a check with the client that he has really done the transaction. And me, in my case, digital bank always took a decision like whatever the transaction amount, right? At least above $1, we need to get, when you get the verification code that you need to enter, because that's kind of protecting you pretty much 100%, protecting the client and the bank. What happens very often, banks are focusing on protecting the bank is not going to lose, right? Yeah. So we need to put exactly the same. If the client, so implementing that is very important, and is reduced significantly the number of fraud, almost to zero, I would say, on cards. But also, I believe that in future is what I was mentioning on the first point. I think right now I said that when you send a transaction, it's gone within a millisecond. But if you're able to add in future to traditional finance for transaction and the blockchain and traceability, even if the money went somewhere else, you will be able to know where it went. So then is when you enter, okay, there is a lot of discussion about it, but that will be the the panacea, the optimum when you're able to follow your transaction. After, you need to look at all the ethical issues about it, right? How people, it's become very intrusive, where you know exactly where the money went, etc. But so this balance is going to be needed, but the technology is available already to be able to avoid these kind of issues. And I think any digital bank or even traditional bank have to invest a lot on cybersecurity, transaction monitoring, and the latest technology. In fact, I see as well, when you look at the transaction pattern, AI is also used to identify, okay, is it a normal pattern for this client to send or to split the transaction in 4 pieces or 5 pieces? So all these efforts and tools where you can build very easily rules, which obviously you need to make sure it's not going to be creating too many issues or verification on the client side, but sometime you need to do that and progressively find the right balance between the two.
Yeah, it's tricky getting that balance between making it painful for the client and also providing the security for the client. But I want to discuss AI with you in a minute. I just want to come back first to something you said about SMEs. So obviously there's a huge opportunity in most markets with a digital banking experience for small businesses. We know in the UAE that, according to our data, 35% of small businesses are already using mobile on a daily or weekly basis. And one of the key pain points for them, or one of the areas that they point to that could either be improved if they're already using mobile, or would help them transfer from using online laptops to using mobile, is increased functionality. And when you dig into what do they mean by increased functionality, they're talking about payments, which is critical for a small business, the ability to make payments, the ability to receive payments, and no differentiation between domestic and cross-border, particularly important in the UAE, where so many of the transactions are cross-border. So what should digital banks and traditional banks be thinking about when they're thinking about how do we create a really seamless, great UX for SMEs so that they can do exactly what they want, which is to make and receive payments securely, as you say, because that's very, very important, but to make and receive a payment anywhere to anyone, whether it's domestic or whether it's cross-border. What are some of the things that you should be thinking about when you're trying to solve that problem?
Yes, so I will start by answering by mentioning what are the key challenges of SME banking, and start from onboarding. You can onboard a retail client pretty digitally. For corporate client is more difficult because one of the issues you have maybe in a country like UAE is that you have 60 registries of company. So all the information will be in different format. Also, you need to do a KYC AML to the UBO. So it's simple if one single beneficiary, simple company of one. But when you have kind of company owned by other company, etc., it takes time and a lot of verification needs to happen. So it's more challenging, right, to get a full digital onboarding. So for that, we are establishing connection with a different registry, with a template, the format they have, and we are able to cross-check this and reach high level of onboarding. For the transaction, I think for payment and so on, the issue is more on the architecture or the setup of the company. And it's like a difference of a corporate versus a retail client. An individual is the one who is going to approve a payment. In a company, in a corporate side, it's become very complex because for this amount, it cannot be approved by this person. Above this amount, you need another signature. Then it needs all this. So to make that digital on a phone, right, can be done, but that need a lot of delegation of authority within the organization. And very often a payment cannot go out with only one approval. You might need 2 signatures. So that's what makes it. In fact, the key issue there is not the speed of the payment or anything, because at the end of the day, it can be the same as it's really all this before. And sometimes in many countries, we even realize that even if you go digital, the owner of the company still want to approve physically any payment before it goes out. So I just want to raise that. So, but with company we are digital, right? We are really digital friendly. That can be done. It's not easy, but that requires to spend a lot of time in understanding the structure of the company, who can approve what, and so on. And there is, on top of that, you have regular changes because the power of signatory, right? You receive a book change regularly as well when people are leaving and so on. So that's where you have I think the main complexity is really there. Otherwise, the pipe after to make a payment and so on are exactly the same. So it's more on the verification of a payment before it goes out that the friction is happening.
Yeah, and there's obviously a lot of friction there with multiple signatories. Plus, as you say, a lot of traditional owners still want that physical sign-off, making it even more complex. Okay, fantastic. We were talking about AI earlier, and obviously generative AI, particularly in the last kind of 12, 18 months, like a huge game changer in lots of industries, but especially in digital banking and the ability to help you spot trends from a security point of view. I was reading recently that Klarna have been using generative AI for customer service. I think they've replaced 700 customer service people, and they've reduced the customer service transaction from 11 minutes to 2 minutes with better outcomes, and they've added 40 million to their bottom line. They claim so. Obviously, some fantastic opportunities both from a servicing and from a cost perspective with generative AI. You mentioned it earlier when we were talking about security and transaction patterns and the combination of the human aided by generative AI. What are some of the ways that you think it will most fundamentally alter digital banking, or what are some of the biggest opportunities that traditional banks and digital banks can use this generative AI and human combination for both within customer service and across banking?
It's Charles is in many areas, and we are just scratching the surface. So first, I would say on when you build your technology platform, AI can be very useful for coding, right? To support your coders, etc. So there is a lot of opportunities there, and coding and testing. Because we spend a lot of time testing. Sometimes it takes 1 month to build a platform, but it takes 3 months to test it. And I'm not exaggerating, because you need to test all scenarios. So that is, again, a game changer, because you can automate the test much better than you were doing before. And you can verify your code much faster, and you can accelerate the build. Second, a bank is about managing risk. So in the risk area as well, AI, I would say on the compliance side, and we are using already this kind of tools where, when you monitor a transaction or you onboard a new client, you have a lot of false positive. And if you're able to use AI to map the thinking process of a compliance officer, you're able to reduce significantly the number of false positive. And one of the systems we were using is in fact implemented in a country where they reduce, and we use that as well. A big bank were having 20,000 false positive per day, and they reduced it to below 1,000. And the central bank didn't believe it. The central bank spent 3 months to review, and they confirmed that the system was doing it right? So that's, the cost of compliance is huge. And this where AI can be used. Then you can use AI on, as you mentioned, on a call center, and we mentioned it before, right? To make human plus machine to be able to better answer any kind of client question, or you can also, for maybe simpler task, maybe do it through a chatbot. Then AI can be used, and I really believe in that as well, to be able to identify on the wealth management side the best opportunity for clients, because people, they want to be recognized. So AI is going to help to recognize the client by giving more context and provide the best offer possible. So it's like an experiment I did many years ago, but it was too early, 10 years ago, when we implemented AI, but it was more predictive AI, where based on a client portfolio, based on his risk appetite, investment objective, and preference, and based on a product recommendation coming from a investment office or from what we could find information about product available in the market, we were able to match a product with a client, and we were also able to explain to the client why it's a good product for him. So it was not, but now with a new technology, because what we did was 10 years ago, it was good, but I think the natural language processing was not good enough, right? Because you remember, there were a lot of data, and the system was good for natural language, but it didn't understand the financial terms like inflation. Okay, what does that mean, inflation on a financial term? What does that mean, growth? What does that mean? And we need to train every kind of vocabulary. Now with the technology, with generative AI, all this is possible. So you should be able to come up for the benefit of the client as well, and in support of the relationship manager or financial advisor, to be able to give recommendation to your client and explain to him why you believe the product is matching his interest. So that's many areas on the risk side, on the technology development and testing, on the support, customer service support, plus on the investment product as well. There is a lot of opportunity for AI, but if you dig into it, there is even more and more. I'm sure there is a lot of area where you can benefit. Obviously, all the analytic part, right? You can analyze much better all the information we have in the bank. Maybe the central bank reporting can be enhanced by AI. So I think there is no limit.
Okay. Speaking of 10 years ago, and apologies for aging us both here, I remember it was close to 10 years ago when you were building Digibank in India, and we were chatting at the time, and we were talking about the clash of cultures, because as you say, banking is all about managing risk and digital only, and the startup mentality and the technology mentality is all about taking and embracing risk. And 10 years ago, we were discussing how to try and merge those two cultures together to produce a better outcome. Is that something that's still challenging for traditional banks, trying to embrace that technology-based mind, slightly more startup, more less risk averse mindset, or is that something that's sort of dissipated over the last decade? Or what are your thoughts on that?
So I think it's the same, exactly the same at 10 years ago. At least the diagnostic is the same, right? You have two DNA who are competing. The DNA of banking, which you obviously don't want to compromise, is about managing risk. Bank is about managing risk. So be compliant with regulation. People need to trust you, be able to assess the risk, having the financial expertise, and that's the key point. What you need to combine it is with the DNA of digital. And DNA of digital is more about building a product for the client, so customer centricity, use of latest technology, leverage analytics is what you need to bring. The good news is that over the last 10 years, I think people are evolved. In banks, you find more and more people who have embraced the digital kind of DNA. And you have also on the digital space, you see a lot of companies who started, and it was very easy to open an account. It was very easy to transact. It was all, based on everybody doing the right thing, but things went wrong. And they also learned that the risk, particularly when you touch about any financial product, is what you need to have in mind first. So you build from a risk first, but you add all the elements that can make the life of the client easier, and at the same time protecting the bank. So you can see all this example where digital players, they start very, very fast, digital only, I'm meaning, but very quickly they have to kind of go backward because they realized that they were facing too many losses, and their clients were facing a lot of losses. So what I say is that I mentioned initially, you need to build a platform with a banking license. Platform means is pretty much be able to integrate with all the digital player within your platform. What the bank is bringing, and the only value of a bank, is to be regulated. When you are regulated, that means that you understand the risk, you know how to manage the risk, and that's what we are for. And that's why clients are going to a bank, because they know they can really make sure that if there is an issue, the bank at least will be able to take some action, and will receive some protection. So yeah, that's, I think the issue is the same as 10 years ago, but in both sides, the learning has been big. So now we are reaching a more balance between the two, managing the risk and the leverage of a digital mindset.
And you mentioned regulation there, and the trust that creates for customers. We know that trust is the number one driver behind all customer experience, and trust is defined as keep my money safe and keep my personal data and information safe. And whilst fintechs and digital banks and tech companies have made huge strides in how much trust they've built with customers, still banks, the traditional banks, followed by the schemes, lead globally in every market where we have data for having that level of trust when it comes to keeping my money safe and keeping my personal information safe. So obviously you've built 4 digital only banks now in different markets. If you were giving advice either to the CEO or founder of a digital only bank, or to the CEO or head of digital at a traditional bank, particularly within the lens of trust, how do digital only new banks create that instant level of trust that the more established brands have, and how do the more established brands leverage that competitive advantage to try and to defend their customer base against the digital only banks?
So what is very important, and you can see every player, right, is really have a license, right? So the license is a foundation of the trust you are having, because the license is on itself is not because you have a license you can be trusted, but you have a license because you are following certain kind of process, and you're able to manage risk, etc. So the advice I would say give to any entrepreneur, or on the bank side first, is don't try to do everything yourself, right? This really build some things that will be able to aggregate other solutions, because it's very unlikely that any bank will be able to be the best at every component of banking. So you will find maybe better PFM, personal finance managers, and if you build it yourself, you will find better people who have been focusing on payment and have mastered the customer experience. So be able to include them in your solution. So that's why, again, I repeat myself, but when you build a bank from an architecture point of view, it should be a platform where you can add some components that you don't have, and really understand as a bank leaders that your key responsibility is to, again, I repeat myself, but to manage the risk and protect the customer money. Don't take any risk. And if you are an entrepreneur as well on a digital space, is really try to identify an issue that banks are facing, and provide a solution. It's not having a solution looking for a problem, but is a problem and then find a solution and try to focus on that, because focus is very, very important. And also when interacting with bank, because ultimately, sometimes what is built by a fintech cannot be used without a bank, because you need a license to be able. So if you work with a bank, you need to make sure you find someone within the bank who is going to be your kind of sponsor and making sure your solution is going to be implemented. And that's very important to get that. If you don't find a sponsor within an organization, it's going to be very difficult, because there is always many reasons why you don't want to take any external technology solutions. People will always find a reason not to embrace others' technology.
Yeah, I like the idea of making sure that there is a problem for which you have a solution. We spend a huge amount of time going into our data, helping our clients, whether they're traditional banks or new banks, to ensure there is actually a pain point, a customer problem that they need to find a solution for, rather than just a nice to have, which is never going to have as much penetration from a product point of view. Listen, we're out of time. Thank you very much, Olivier, for taking the time to speak with us and for sharing your expert insights and experience. As always, a complete pleasure chatting to you, and we look forward to chatting to you again very soon.
Thank you so much.